Yo, what is going on, guys? Welcome back to another video. So in today's video, I'm going to give you a really big breakthrough, and all I'm going to need today is 10 minutes of your time. And in today's topic, what we're going to be discussing is how to know if an order block, institutional candle, supply, demand, whatever you want to call it, how to know if it's going to hold or not, how to know if price is going to react from that zone or not. And today we will be looking at it from an order flow footprint perspective. So all I'm going to need is 10 minutes of your time. Make sure you stick all the way through to the end. If you enjoyed the video as well, make sure you drop a like and subscribe beforehand. And before we get started, also really quickly, I have prepared for you a free order flow introduction ebook down in the description down below. So if you go down to the description and download it right now, you'll be able to get a much better understanding of what we are discussing here if you don't have any clue of what it is. So today on gold, we kind of had this move down and this move up, and overall on gold you will see that price is to the downside. And when we are looking at price, when we're looking at downward market structure, most likely we're going to be looking for sells. And what a lot of people these days they'll do is they'll try and mark out all the different zones and try to find out which one is going to be the better zone to sell from. So they'll have this in, let me even use the replay tool real quick just to make everything look more simple. So they'll have like this institutional candle right here. They'll also look to sell potentially from this supply. There's just multiple zones that they could sell from here. Nice one on the 15 minute, and then they'll have something at the top right here on like the 1 hour or the 45 minute. So they'll have these multiple zones, and this is how I go about judging if the zone will hold or not. So if I pull up my order for footprints here really quickly, so the footprint that I'm using right now here is the Valto 6.0, but we also have our own one. If you're interested in getting that down in the description as well down below. How you go about this is very simple. So we are taking a look at GC, the gold futures, and what I'm looking at is my zone right here. And what I need to do, what I like to do when I am judging if my zone is going to hold or not, is look at the delta. We're not going to discuss anything here whatsoever except the delta, and the delta is extremely powerful. And what the delta basically tells me is it tells me the difference, okay, of buying over selling or of selling over buying. And the higher the delta, in essence, the stronger the candle, the stronger the trading power activity within that candle. Okay, so if you take a look right here, the green deltas signify that there is more buyers. Okay, there's bigger difference of buyers over sellers within that candle. And then the red, there's more sellers. Okay, there's bigger difference of sellers over buyers within that candle. And the bigger the number, okay, the stronger the candle. Okay, the stronger the trading participants are within that candle. So as you can see, as we approach this zone, it's very important. Three things: how price approaches the zone, how price taps into the zone, and how it goes away from the zone. The first thing we always look at is how price approaches the zone. And think of it for a second. If I'm looking for sells, and as we near my supply, what should I be looking for? I should be looking for a decrease in buying activity. I should be looking for a decrease in buying interest, and I should be looking for sellers starting to step in. That's the important thing. But let's take a look at our first zone right here. Okay, as price approaches the zone, look what we have. Went from 9, 65, 214, 228, 117, 257, 137, minus 227. Okay, but this got absorbed right here. Now we have 78. Okay, and then we have 208. This is a clear sign that the sellers are not stepping in, and it's a clear sign that the buyers are still interested in eating up the demand. Okay, they're interested in taking up the demand, hitting the offer, hitting the offers. So as you can see right here, I had no reason whatsoever to enter from this zone. It was clear as daylight that price was not going to react from our zone right here. Let's take a look at my next zone. Okay, let's take a look at my next zone, and our next zone is around 3 a.m. okay, around 3 a.m. and as you can see, price breaks through. And now as we near our next zone, let's take a look. 950. So I'm going to pull up here. Now it's much more difficult to backtest with the order flow footprint, because it doesn't go that far back in data for me, and the fact that it's just kind of, you know, it's a bit more difficult to read. But this is why I like to use the timing. So 1250, we make another run to the zone, and let's take a look as price approaches my zone. My zone is up here, okay, somewhere up here. let's take a look at what price does. So 31, 71, minus 105, minus 97. This is good signs, okay? As we are approaching the zone, the buyers are getting weaker and the sellers are stepping in. But straight away I'm seeing, okay, 49 come back, and then I'm seeing minus 92, 76, minus 81, minus 18, 118, sorry, and then 106, 213, 29, 125. This is a very, very strong sign right here. If I have both, a mixture of buying and selling, this is a consolidation for us, okay? And a lot of the time, from simple price action perspective, we'll think that, okay, this is a consolidation, there's no one side beating the other. But when we look at the delta, we can actually see the difference. Okay, we can actually see that the buyers right here, if you take a look at this consolidation, there's actually more buyers and there's a much larger delta. There's a larger positive delta in comparison to the negative deltas right here. And as you can see, that eventually comes in the form of big candles. Look, 362, 558. Okay, and boom. As you can see, price smashes through that zone. What we want to see is price straight away as it taps into my zone react, and I want to see sellers stepping in. I want to see all those passive participants from that supply get triggered, and I want to see price drop to the downside. This is what I want to see. I want to see a quick straight move. If I don't see that, then clearly something is going on. Clearly the buyers and sellers are fighting here, okay, or someone is getting absorbed. So if it's not fast, okay, then most likely it's not going to work out. Another important thing, as obviously I see my negative deltas, I need to see an increase in negative deltas to show me that as we are going down, they're getting stronger and stronger and stronger, and there's more interest to sell. But if I'm seeing here, for example, minus 81, then minus 116, and I'm like, okay, it's increasing, but then the third candle, okay, I'm seeing 106. Clearly there's not much interest here. Whereas if you take a look at somewhere, take a look at here, for example, look, minus 47, 66, 290. As you can see, there's a decent increase, and that's why you see we had that little drop right here. We need to see an increase. Same with the positive deltas. Okay, I need to see increase in price. 9, 65, 214, 228. I see clear increases, and as you can see, price goes up. So it's not just about the delta itself, it's not just about the size of it, but it's also about the increase and the decrease of the delta. Okay, so we take a look at one last zone, and as you can see, price just blew through this zone too. No reaction, and let's just blew through it. Then what do we have? We have our last zone right here. As we tap in 3 o'clock, let's take a look at what happened at 3 o'clock. 3 o'clock, and this is the candle right here. What do we see? Minus 91, minus 154, minus 48, 105, 362. Right here you can see that there's an immense amount of buying in comparison to all the previous deltas that we've had right here. This is really big in comparison to all the previous ones. Now this is not the best sign, okay? This potentially could have sold off, okay? As we seen price in the next candle come in with only 24, and then the next one right here coming in with minus 188. But at that point, that zone would have been invalidated. I wouldn't have seen this candle. If I did see this candle and my zone was a tiny bit above, maybe I would have sold, because I could see that there's a huge drop, 362 to 24, huge drop in buying activity. But as I'm seeing this live, I'm only seeing the 362, and it's very clear from the 362 that this is very strong in comparison to all the other deltas. Does this look convincing that we should be looking for sells? No, not really. So as I said, the zones that would make most sense for me are as we are approaching. Okay, if we're looking for sells, as we are approaching, I want to see the sellers dropping off, and then as we tap in, I want to see the clear aggressive selling coming into the market, bigger negative deltas, and as we are going away from, I need to see an increase in negative deltas. And this is an extremely simple way to identify if price is actually ready to react from your zone or not. So that is pretty much it. And like, of course, there's other things that we look at on the chart itself right here. Okay, there's other confirmations, potentially look at some divergences, etc., to predict these reversals, but this is one of the easiest and most basic ways to look at it, and simply look at it from the delta. So that is it for this video, guys. I appreciate every single one of you for watching through to the end. If you haven't, as I said, make sure you go into the description right now and get access to my free Orderflow ebook to get more understanding of an introduction of what Orderflow is about. I hope you enjoyed this video, and I'll catch you guys on the next one. Bye bye.